All right. What's up, everyone? Apologize for my tardiness, but it was a little bit of an unexpected busy day. Hope you all are well. Alrighty, let's see what we got. Peter, how are you? Connie Ruiz. Hey, Romero says it's freezing out there tonight. You know, it is, but the good news is that it should be getting better. I think tomorrow, or maybe not tomorrow, maybe Wednesday, I think. It's going to be about 50 degrees, 57 on Thursday, so you know, we just gotta muscle through the brutality of the cold for a little bit longer as we're standing right outside 432 Park. A lot to talk about tonight. A very, very volatile day in the financial markets. Lots of news, lots of good, lots of bad, lots of uncertainty, and we'll talk about it tonight. Sally's here. What's up? Richard, welcome. Hymns, cheers. Let's see who else we got. Todd, Nora, welcome. Good to see everybody. As always, reporting live on 56th Street and Park Avenue. I see Tatted T, Melee, what's up? Hey, Samantha R, whoa. Good to see you. Hopefully you're well, long time no see. We also have some new IPO news. A pretty big initial public offering out of China. Now, it's interesting because I had a little Bloomberg notification this morning. Big IPO listed in Hong Kong. I believe the company is pronounced Mixue. I've actually honestly never even heard of it. I'm actually curious to see if you guys have heard of the company. I believe it's spelled Mixue. However, the pronunciation is Mixue. Now, they raised about $400 million in the IPO today. They listed in Hong Kong at a valuation of roughly $10 billion. Now, if you compare this, I guess I'll just tell you what it is. It's like an ice cream slash bubble tea place. They're massive in China, all over Asia, and they have around 45,000 locations. I believe they also have a few locations in Australia as well, but they have more locations than McDonald's worldwide. Now, the product that they sell is like an ice cream boba type drink. I think it's only like 87 cents if you do the conversion to US dollars, right? But it's pretty interesting, right? You know, a lot of these boba brands have been really popping off, becoming very, very popular in the Western world as well. If you ever walked around New York City, San Francisco, and now even really in Miami, you have a lot of these bubble tea slash boba brands. So that's going to be one to watch. Now it's listed in Hong Kong. The spelling is Mixue. For those of you who are interested, you could look it up yourself. Mixue, big IPO today out of China. All right. We'll just do the quick audio and visual check, and we'll go ahead and get started. So if you guys can hear us, and if we're streaming in 1080p, just go ahead and leave a thumbs up in the chat, and we will get started. Again, apologies for being tardy. Tomorrow we're going to be back on normal schedule. Today just kind of threw me through a little bit of a little crazy day, but crazy in a good way. Kind of have deals popping in and out of nowhere. So right outside of the Four Seasons, New York. This is now open for business again. Looks great. You could also buy a unit in there if you want. Yeah, Steve says more locations than McDonald's globally. Definitely deserves a look. It's interesting, right? I think they have over 45,000 locations worldwide, predominantly in China, so on the mainland. About 90% of their locations are in China. A few scattered in and out of Asia, and they got a few locations in Australia. But yeah, an interesting one, right? IPO today raised around $400 million in the IPO, $10 billion valuation. Mixue, an ice cream bubble tea brand. Interesting. Anyway, good evening, everybody, and welcome back to Walks and Wall Street. Today is March 3rd, 2025. I think it's around 10 p.m. It's a very cold night here in New York. I think it's about 30, maybe 35 degrees. It was freezing today. It was in the 20s, but the good news is that it's going to warm up. So as the weather gets warmer and nicer, we'll be able to venture out into different parts of the city. Also, as the days grow longer, we'll be able to get down to Soho, Tribeca, Lower Manhattan, even Brooklyn and Queens. We'll start our live streams up walking over the Brooklyn Bridge, Manhattan Bridge, as it'll be light out and it won't be so miserable in terms of the weather. But today in the financial markets was yet another major distribution day. And I want to spend a few moments talking about it because right now, and I kind of wrote this down, I tallied it down, we now have on the S&P 500, I believe 7 distribution days. I got to check the volume profiles to finish the day today, but we have 7 distribution days on the S&P and 8 distribution days on the NASDAQ. And many of the true market leaders, or the TMLs, right, that really propelled this market higher through this bull market, a lot of them are faltering. I would say case in point is NVDIA. If you pull up a chart, particularly on the daily, maybe it's a little bit more clear on the weekly. However, we have right around 8 months now worth of sideways choppy action on NVIDIA. And this is very reminiscent of a potential topping pattern in a lot of stocks, right? You'll have the really major parabolic rise. I think NVIDIA is up over 1,400%. And if you look at a lot of the volume throughout this 8-month base, there's really been no upward progress. It's kind of been whippy and choppy all throughout the base. A lot of that is looking like distribution now. And we've been getting a lot of positive news. And usually when a stock or the market has a hard time rallying on positive news and sells off, that's kind of a tip. So we are now below the 200-day moving average on NVIDIA. So that's something to watch. And I know a lot of people have been long and strong, so to speak, NVIDIA, and have done really well over the last year. So it's important to protect those gains, right? As those distribution days rack up on the NASDAQ and rack up on the S&P, 7 and 8 days now, and with a lot of the TMLs now trading below their 200-day moving average, it's a time to at least protect some of those gains. If you look through the broad swath of the main sectors that have been powering this stock market rally, particularly semiconductors, I want to switch gears and look at the semiconductor ETF, the most widely followed one, ticker symbol SOXX, the SOX. You're seeing a similar thing where the SOX are truncated now, breaking down below their 50-day and their 200-day moving average. So pretty much all of the major leaders and all of the major sectors are now solidly in correction. Even though the market, in terms of the S&P 500 and the NASDAQ, aren't really too far away from new all-time record highs. But this is kind of a way we can gauge the overall strength of the market, is by hammering through sector by sector and stock by stock. And we do have a lot of distribution here. With this new Trump administration, I would say for the first probably 1 to 2 years of this administration, you're going to have a lot of volatility. You're going to have a lot of, backing and filling in the market to account for the tariffs and the like. There's going to be a big shakeup, which is to be expected. But that is going to take some time for the economy to adjust. And what drives the stock market higher is pretty much two things: liquidity and earnings power. And right now, there's going to be a lot of companies that are going to need to shake up their supply chains in order to circumvent these tariffs. Speaking of tariffs, the Trump administration has confirmed today, this was announced, I think, midday. That's kind of when the market reversed. There will be 25% tariffs going into effect tomorrow, or probably tonight at midnight, right? March 4th on Canada and Mexico. And I would advise people to think about this even more broadly than Canada and Mexico. Think about the other countries, particularly in Asia, that have moved some of their supply chains and manufacturing capacity to Mexico, right? When I think of Mexico, I actually think of Japan. I know it may sound crazy to say that, but it's true, particularly for a lot of the auto manufacturing, right? A lot of the Japanese automotive companies have built significant manufacturing infrastructure in Japan. So it's going to be interesting to see how they make decisions going forward to kind of circumvent those tariffs. There was some news that obviously it's going to be tit for tat tariffs. Canada's going to hit back. Mexico may hit back. We will see. But I want to dive deeper, and I'll get to the comments in a second. It's just going to be a shorter than normal live stream, which I apologize for. But I actually went ahead and I pulled some data in terms of our trade deficit data, just to kind of put things in the appropriate frame for the conversation and the context. So I want to go back to last year, 2014, which was only about a month ago. So the United States, okay, we imported about $1.2 trillion more in goods than we exported in 2024. That hit a new all-time record high for our deficit. And if we kind of go down country by country, or really region, right? If you think about Asia, if you think about Europe, our largest deficit is with China, about $295 billion in 2024. And then Vietnam at about $126 billion. So as we kind of have these deficits ballooning, one really quick piece of additional context, the deficit with China is actually going in the positive way, because we've had a lot of shakeup with COVID, right? A lot of companies have mixed up their supply chains. So we actually have growing deficits with countries like Vietnam and Taiwan, and a little bit improving deficit with China. In terms of our neighbors to the north and south, which is what we're going to be talking about tonight, obviously because Trump authorized those 25% tariffs going into effect tomorrow with Canada and Mexico. In 2024, we had a $63 billion deficit with Canada and a $172 billion deficit with Mexico. So the theory is these tariffs are going to act as a negotiating tool to get more favorable trade terms. Now, are the tariffs the best way to go about it? Well, that's up for debate. I'll leave that up to you guys. But that is definitely going to shake and shock the markets and create short-term volatility. However, I think that's going to set us up for some really unbelievable opportunities, potentially even in the second half of this year, depending on how long this plays out. So I really want to stress the fact to really pay close attention to market mechanics here, okay? I just will repeat this one more time. I think it's important. There are now 7 distribution days on the S&P 500 and 8 distribution days on the NASDAQ. Historically speaking, once we hit about 5 distribution days across the board on the major equity indices, you can pretty much bet that we're going to get some sort of a correction, meaning a 10% plus drawdown from the major indices, which would then mean more in individual stocks. So as a review, I would go line item by line item, look at all of your biggest winners this year, or last year I should say, and see where they're at. Right, NVIDIA now trading below the 200-day. You have Amazon breaking its 50-day moving average, and you have the semiconductor sector as a whole in a correction. Now, obviously the market got shellacked today, but did anybody notice the sector that actually was bucking the trend of the market and had a pretty good day? Yes, gold was up over 1% today in terms of the paper, the GLD, but consumer non-durables performed exceptionally well. So I'll give you some ticker symbols. You could look them up yourself, and then I'll kind of explain the context of why this data is important. So look at ticker symbol MO, ticker symbol PM, ticker symbol PG, Procter & Gamble, and ticker symbol CHD for Church & Dwight. Okay, now these are all stocks that make up the consumer non-durable section, right? Church & Dwight make baking soda, Procter & Gamble, household goods, and a lot of the tobacco stocks. So when you have a day when pretty much there's a pan sell-off across the board in high growth was hit probably the hardest, high beta growth stocks, tech, down in a major way, and you see cash going into all of these safe haven plays, Procter & Gamble, Church & Dwight, a lot of the tobacco stocks. That is really a glaring signal that the market is looking for a flight to quality, a flight to safety, and the market is just quite frankly overdue for a correction, right? We've had an unbelievable 2024. We've had, back-to-back years, 2023, 2024, over 20% gains for the S&P 500. It's normal for the market to go into corrections. Doesn't mean it's Armageddon, but it does mean that you need to get defensive and lock in some of those gains. So pay close attention to that semiconductor index, as that is now in correction, as well as all of the major tech companies that have now fallen into correction as well. Additional context here, my friends, which I think is very important to bring about now that we're talking about tariffs, right? We just covered the deficit with Canada and Mexico in terms of the trade for 2024. About $63 billion deficit with Canada and $172 billion deficit with Mexico. Now, I want to switch gears and briefly touch on Ukraine and Russia. So there was some breaking news that the United States of America is no longer going to be funding this war. We're not going to be giving any aid to Ukraine. So the European Union, pretty much all countries across Europe, are really hunkering down here, probably going to increase spending on military aid to Ukraine and beef up their own militaries, which is probably one of the main reasons why we're seeing defense stocks in Europe absolutely go on a tear. You have the German DAX really defying the odds and hitting new all-time record highs pretty much every day as the U.S. markets are kind of falling under pressure, which the market's kind of telling us, look, if the USA is out, if we're not going to fund the war efforts anymore, it's going to fall on European Union nations, which means they will have to increase the percentage of GDP that they spend on defense, right? Beefing up their militaries, and that is why you see rip-roaring rally across the board in a lot of those defense stocks over there. Let's talk about trade volumes before the war broke out, before Russia invaded Ukraine. So in 2021, This was just before the Russian invasion, right? So this is why I'm pulling this data point. The U.S.-Russia trade volume in 2021 was about $36 billion. Okay, so, we buy goods and services, energy from Russia. Before the war, that totaled about $36 billion. In comparison to the European Union, $270 billion. Predominantly buying energy from Russia. And there has been many politicians, U.S. politicians, kind of warning a lot of the countries in Europe and the European Union that you cannot be too dependent on Russia, right? They're spending about $270 billion purchasing goods and services from Russia. So it's kind of weird. On one hand, they're funding the war efforts to back Ukraine, but on the other hand, they're buying energy from Russia. So there's going to need to be a major shift there, and which is probably going to be a talk for another night when we talk about nuclear power. France is actually doing a really good job with getting old nuclear power plants back up and running and trying to extend the life of their existing nuclear infrastructure. But it is quite costly, but they are doing a good job of that. So that was the intro. It's a long intro, about a 20-minute intro. My God. But yeah, let's say hello to everybody in the chat. DC322, thank you for joining us. Happy Monday. Patrice 2020, thank you for joining us. Hopefully you had a wonderful weekend. I see Alan. What's going on? Yeah, longest intro ever. Let me know how you like that article, by the way. I was trying to send it to you on Twitter DM, but I knew that the article was paywalled, so I just took a picture of it and sent it to you. Jamie Vogel, what's going on? Professor Dario, hopefully you're doing well in Argentina. Oscar D is here. Rick, thank you for joining us. Peter says, Tom, you pronounce Mixue as Mixue. I don't know, I'm probably butchering it. I apologize for that. Yeah, and the story is pretty incredible, right? The story of that company is pretty incredible. And the founder is now a billionaire, came from very humble and modest beginnings in China. But for those of you who are just joining, we did have a pretty big IPO hit the market in Hong Kong. It is a bubble tea / ice cream company. I've actually never heard of it until today. It has about 45,000 locations worldwide. More locations than McDonald's, but predominantly 90% of their locations are on mainland China. If you want to look up the company, it's Mixue, or Mixue, I believe it's pronounced. They raised about $400 million today with their IPO at a $10 billion valuation, 45,000 locations across the world. Hey, Cameron, thank you so much for your $5 donation. I appreciate it. It says, hey, Tom, hope you had a good day at work. Are you going back to Miami soon? The answer is yes. We will be back in Miami March 11th, and I should be there for about a week. And hopefully we'll have some live streams from the beautiful Palm Beach. Hopefully I'll be able to get up there. Oh, by the way, I forgot. Our good friend Patrol, I'm not sure if you're in the chat tonight. When I ended the stream, you sent me this generous donation of $100. So I missed it. I apologize for missing it. I just ended the stream when you sent it. But I just wanted to call you out and say thank you for the support. But you definitely don't need to send me that much money. That's crazy. But thank you for your kindness. So Patrol, if you're in here or you watch it later, I just want to say thank you. I'm very appreciative of you. Thank you so much. Hey, Brad's Brain, what's up? Hope you're well. Hopefully you've navigated the markets well today. Pretty wild day. Rick says, did you see Core? Yeah, so I think Did they file for their IPO yet? That is a pure play AI company, I should say. And I believe NVIDIA has a pretty hefty investment in that company, and they're set to IPO pretty soon. Oh, Rick says, yeah, they listed, or they filed today. Very cool. Very, very cool. Now, this is also another thing we need to pay attention to, is the IPO market. So, and we've talked about this ad nauseum, but it's very critical to pay attention. We reviewed it yesterday. We might as well review it again. If you want to read a great article about the IPO market, just read the cover story to Investors Business Daily this week. So 2021 was the fever pitch of the IPO market. And that was when all the crazy, SPAC mania, all the fraud allegedly was going on. Any company was hitting the market. It was going up 100% on list day. That was peak euphoria. And then once the Federal Reserve started to increase interest rates, right, shift their gears from quantitative easing to quantitative tightening, that pretty much, wrapped up the IPO market. It's pretty much been shut off since 2021. 2022 was dead. There was virtually no business. 2023 got a little bit better. 2024 got a little bit better. And I think 2025, the tail end of 2025 into 2026 is going to be a massive, massive boom for the IPO market for a few reasons. The cyclicality of the market and the interest rate environment, right? And I mean, I can't predict where interest rates are going to go. But I think they'll be substantially lower in the second half of the year into 2026, which means financing costs are going to come down, and it's going to be a little bit easier for companies to go public, assuming the market recovers. We do have some significant unicorns that are getting ready to go public, one of which, Richard, I think it was you who just put that in the chat. A lot of the pure play AI IPOs are probably going to go public. And what's more important is not necessarily paying attention to the companies that can go public when the market is great, but paying attention to companies that go public in a bear market. Because you can have investors part ways with their money anytime you want in a bull market, right? If anybody's ever tried to raise money here or has had a job like in fundraising for a hedge fund or anything, right? A company, when the economy is ripping and everyone's making money and the markets are flying, it's very easy to have investors part ways with their cash. It's very, very hard when the opposite is in effect. When you have a brutal bear market, capital markets are shut off, money is expensive, it's very difficult to raise money. So the theory is, if you can have a company go public during a bear market, that company is probably very, very high quality in terms of its earnings durability, sales durability. It's not just going to be these pie in the sky, estimates and projections, which were a lot of the SPACs, like the special purpose acquisition companies. Pretty much all of them didn't have any earnings. Some of them were even pre-revenue, and they just kind of raised money off of projections. So pay very close attention to companies that go public during an IPO market that's shut off. I would say some of the most notable IPOs over the last few years, like Reddit, came public. It's a great company, and the like. Let me catch up on some of the chats. Apologize, I'm not reading too many right now. Got Yours says there is so much private money out there that many AI companies are skipping going public. That's true. Yeah, I mean, the boom in VC, private markets, and just a lot of the regulatory scrutiny that goes along with being a public company, right, are deterring companies from going public. So you're 100% right. However, many people, especially if you kind of look at the life cycle of a unicorn company, many of them are maturing now at like 10 years. And a lot of people want a payday, right? And one of the easiest ways to get a payday is ring the register and go public. So you're 100% right. And if you actually look over the last 15 years, it's almost like we're on a tail curve to zero of new companies going public. It's just not fashionable, relatively speaking, for companies to go public anymore. There's just so many other avenues, so to speak, to take. It's a really good point. It's a really, really good point. Hey, hang with Mark Mom. What's up? I see Nora is here. Ben ends, as I originally said, it would take 12 to 18 months to settle, pending unforeseen events. E-Dash is the only place that always makes money is a casino. I was reading, totally kind of unrelated, but your casino comment kind of brought it to mind. I was reading this article on Vegas. I'm not sure if it was like a hit piece on Las Vegas or not, so I kind of took it with a grain of salt. But apparently, a lot of the casinos in Vegas are on the brink of going belly up. Is that true? I don't want to put that out there because it may just be a hit piece. And I don't know anything about that business. I don't really, not familiar with Vegas, but I think one of the properties there, they were talking about the Fontainebleau Vegas is not doing well. Any truth to that? Again, not my wheelhouse. I'm more of a tech guy, so if anybody knows, let me know. DC322 says the Nikkei market already down. Yeah, Japan. One of the things I said at the beginning of the stream that's going to be very interesting to see how this plays out. Many people are focusing on the tariffs, obviously, with Canada and Mexico, right? 25% tariffs going into effect, any hour now, right? But I think we need to think past Mexico and think about other countries who have invested in Mexico in order to get to the United States. Does that make sense? So over the last decade, you've had a lot of countries with like big companies, right, from Japan. Since you brought up the Nikkei, we'll just talk about Japan, that have used Mexico as an easy way to circumvent fees, regulatory hurdles, and labor costs, essentially, and as an access point to the United States. So Japan has huge exposure to Mexico in their auto industry. A lot of Japanese companies have built manufacturing facilities in Mexico to build cars to then ship and send to the United States. And one of the main reasons why they've done that is because of the cheap labor, right? It kind of sounds harsh to say, but it's true. They're exploiting the cheap labor in Mexico. So with these 25% tariffs that are going to be slapped on goods coming from Mexico, you're probably going to see ripple effects across other countries that have made significant investments into Mexico, particularly the auto sector in Japan. If you're just joining us, JD, what's going on? Hopefully you're well. I want to read off some of these statistics in terms of the trade deficits. And I've read this off at the beginning of the stream, but we do have more people joining, and I think it's the appropriate context as we're talking about tariffs. So the United States imported about $1.2 trillion more in goods than we exported in 2024. It hit a new record. So our deficits have hit a new all-time record high in 2024, with the largest portion of that being from China at $295 billion. Deficit, Vietnam being $123 billion. And if we go over to kind of our neck of the woods, the Americas, if we talk about Canada, our deficit is $63 billion, and Mexico, the deficit is roughly $172 billion. So the theory with these tariffs, right, and to many people's point in the audience, is that these tariffs are going to cause a real big shift and shake-up and turbulence in the economy, which it will. The goal of those tariffs are to get those numbers kind of back into the realm of fairness, whatever fairness means, right? And there's also many reasons why we have ballooning deficits, because the United States is a very, very strong economy, and we spend a lot of money, right? Because we have to understand what are these deficits, right? It's not just for nothing. They're for goods and services. So as people in the United States spend money, right, supply and demand, well, bringing things in from other countries, as we spend more money, we purchase more goods and services from those countries. And a lot of those other countries aren't big spenders. So that's also another part of it. So in theory, the tariffs are meant to kind of get back to the drawing board, negotiate favorable deals, but that will not be without volatility. Which is, if you remember correctly, before the election, I mentioned this. I said, look, the tariff situation is not being explained to the American people in the appropriate way on both sides. Okay? If you remember on the campaign trail, you had the Trump administration saying tariffs are going to be the best thing ever. You know, on day one, I'm going to bring down prices. On day one, I'm going to balance the budget. I'm going to reduce the deficit. And I'm just going to slap tariffs everywhere. It's going to be, Goldilocks, right? And then on the other hand, on the Democratic side of the aisle, you had, hey, tariffs are the worst thing ever. It's just going to cause a bunch of inflation, and it's going to do no good for the economy. It's going to crash the markets. It's going to do no good for the economy. Both of those frames are technically a little bit disingenuous because there's a little bit of truth to both of them. However, if you framed it correctly and ethically, you would never win an election, right? And that's kind of why I don't like politicians, because they essentially default have to lie to gaslight voters. The appropriate frame is this. You got to stand up in front of the American people and read the statistics that I just wrote. We have an all-time record high deficit, trade deficit, $1.2 trillion in 2024. Our goal is to fix that. But in order to fix that, the average American is going to need to endure short-term pain. No way around it. It's not going to happen. And you need to live in reality, and you need to come to terms with that. So when we put on these tariffs, everybody's not just going to roll over immediately. It's going to cause volatility. It may cause short-term price increases with the end goal of negotiating favorable deals, reducing our deficits, with the goal of balancing our budget. But if you explain it like that, nobody would ever vote for you, right? I mean, the American people want to vote for the person who's going to lie to them the most and kind of gaslight them the most, right? You kind of have to, nobody's going to vote for short-term pain. If you had any politician on both the right or the left really reason with the American people and say, look, the stock market may not rip. If we really cut government spending, right, if we rein in spending on the fiscal side of the house, that is going to potentially put a dent in the market, right? Because both fiscal and monetary spending are both stimulative for the economy. It just is. And that's one of the main reasons why, if you look at the data, markets actually tend to perform better under Democratic leadership than Republicans. And that is for many factors, but a big factor is Democrats tend to be more for big social programs, big spenders, relatively speaking, and that is very stimulative for the economy. If the government has a big spending budget and they're spending on, reinvesting into roads, reinvesting into technology infrastructure, well, that means private companies are going to get big contracts and make a lot of money, which in turn leads to an earnings boom at those companies, leading the stock market higher, right? So if we do the reverse and rein in government spending, you're probably going to have a decline in earnings and maybe even a quarter or two of negative GDP growth. That is possible. Which, by the way, on the GDP front, we did just get some GDP estimates out, and it's looking like for Q1, we may get a negative GDP print for Q1 2025. All right, let me read some of the chats. Ed Dunkel says, I still think it's crazy to fire the National Weather Service. Grinch is here. What's going on? JD says, Canadians aren't going to roll over, we'll hit back. Laced Mushroom, what's going on? Pineapple Water says, agriculture will get the hardest, or will get hit the hardest, and America must subsidize them. Him says, politicians aren't experts, they're people pleasers. That's probably one of my favorite comments of the night. They don't say what's actually going to happen. True. Franks is just due to oil. Without oil, the U.S. had a surplus with Canada. Bryant Lopez says, any tips for a 21-year-old who's not in college, just working a retail job, living with parents? Yeah, I would say, what do you like to do? I would say take 2024 or 2025 to do something so drastically different. Maybe have fun with it that way. Put yourself in a very uncomfortable spot. Maybe I'd say that. I don't have all the answers. I'm not some guru. But, I don't know, if I was in my 20s, not in college, working a retail job, which there's nothing wrong with that. I worked retail jobs. Nothing wrong with that. Nothing wrong with a hard day's work. You're working hard. I would just make a drastic change. I would do something so 180 from what I'm doing right now and put myself in an uncomfortable spot, kind of put my back up against the wall and force myself to figure it out. Because if you think about it, if you're living with your parents, that's fine. You're spending time with them, which is great. But there's really no opportunity for growth there, right? If you move to a new city, you figure things out, you kind of have your back against the wall, and you just kind of are forced to figure things out. And I would say use your youth to your advantage, right? When you're 21 years old, people are more likely to help you out and give you a shot, as opposed to if you're 31 years old, right? If you're just starting out. So I would say be very, very curious, ask a lot of questions, and reach out to a lot of people. Figure out what you want to do, and I would really, really pursue it relentlessly. And look for a lucrative career opportunity. Maybe you want to be in tech. I don't know what you like, so that's what I would do. A real blessing that you have is your youth, right? I think, what did you say, you're 21 years old, 20 years old, something like that? I mean, I'm 29 years old, and I feel like 21 was just 2 days ago. I can't believe I'm going to turn 30 in May. I really, really can't believe it. So it may not seem like it right now, but 21 is just a really, really big gift from God. So 29 and 30 is going to come faster than you think. So I would really, really get after it. If you think you have time, you don't have time. So, I don't know, save some money, bank some money at the retail job. Maybe have your goal, save $10,000, save $5,000, and then tell your parents, Mom, Dad, I'm going to New York, I'm going to Austin, Texas, I'm going to Miami, I'm going to Silicon Valley, whatever, and figure it out. Figure out what you want to do. And pour every single second of your time when you're not working your retail job into your education. Pick one thing that you think you're good at and double and triple down on that. Right? You don't have to be an expert in it. Try to talent stack. Maybe you're 25% better in this part of the economy than everybody else, and just hammer on that. I don't know what that is for you, but if it's tech, maybe you want to be in finance one day, just spend all of your time when you're not working your retail job getting better at that. Anyway, guys, 34th Street, big traffic jam here. Look at that. So much for the congestion pricing. This looks like gridlock all the way up. Wow, got yours. Started my first fun company at 19, recording studio. Wow, very cool. 5 years later, got into real estate and started that company. Start a fun company at that age and take the money from that and do something big. That's really good advice, really interesting advice. And the good thing is, I'm not going to assume, but it was probably much harder to start when you were starting than it is for people to start now, right? If you think about it, one of the good things about living in 2025 is just the access to information is really insane. And the access to people is really insane, right? It's really crazy. Within reason, excluding the fact, I always say excluding doctor and lawyer, right? You can't really be an autodidact and be a doctor. It's not going to happen. You got to go to med school, and you got to spend, the 12 years in college, right? You got to do it. And same thing with the lawyer. But for everything else, in 2025, if you really apply yourself and you work on being an autodidact, the information is out there, right? If you really want it bad enough, and if you really study and hammer, focus on your education, you can teach yourself skills, particularly in the tech world and the finance world, right? All of it is out there for free. Guys, look at this. Christopher says, have you been to the new JP Morgan building yet? Yeah, about 1,000 times. That building is amazing. 270 Park Avenue. That is the new JP Morgan Chase building. It looks fantastic. Looks awesome. But this looks awesome too. Look at this. Empire State Building, the classic of the classic. Cole says, Tom, I am almost done with high school. So starting to look for colleges and finding a major. I am considering computer science, but I don't really know what I want to do. Any suggestions? Well, I don't know. I'm not, I'm not like, I don't want to come off as an advice giver. I don't know. But I would say what has worked for me, and I kind of really fumbled my college years. I didn't really do anything useful. I went to college. It was great. I did criminal justice and economics. But when I went to college, I didn't really know anything about college. I didn't really come from a family of college stuff, so I didn't really plan and prepare like many of you. So what I would say is just be a trend follower, right? Oftentimes on the channel we talk about some of the best traders and investors are trend followers, like Paul Tudor Jones, Stan Druckenmiller, and the like. If you have a worldview, I would ask you, what is your worldview in 12 years? What do you think the world is going to look like? Where do you think the puck is going? And then I would match my skill set or my desired skill set to match where the world is going to be in 14 years. So learn a skill that you think will aid you in building the reality you see 14 years from now, right? In the age of AI, in the age of, nuclear power. Like, think just all the stuff we talk about every night on the stream, right? There's going to need to be, and I think I wrote this down. There was an interesting article in Bloomberg today. It was all about nuclear power, right? We talk about data center, we talk about AI. That's going to require a lot of energy. So most of the world's 400 nuclear power plants were built between 1970 and 1990. And most of them are coming to their end of life. So the International Energy Agency says demand for electricity will double by 2050. And the primary source of energy that we're going to get that electricity from is probably going to be from renewables, specifically nuclear power. So maybe you want to, study nuclear engineering or something. I don't know. There's definitely a big market for that. And just look at follow the money. Who's making the big money in the economy, right? Do you want to go into investment banking? And you don't necessarily have to follow your passion early on. I think that's actually bad advice. And I was given that advice, and I think it's bad advice. Because you could be passionate about helping people, but if you reverse engineer it, the people, you got to have some coin to help people. You got to have some money, right? Bill Gates helps a lot of people, but he, minted himself a multi-billionaire first, and then made his family office. So maybe you want to do the 5 to 10 year grind in investment banking. Maybe you want to be a merger banker, right? Maybe you want to be a quantitative researcher at a hedge fund. You want to put in your time, right? And you want to make, the $500,000 to $1 million a year, and then go do something that you're passionate about, right? When in 5 to 10 years, you're going to be 32 years old. You're going to be really young. And if you have some cash, then you can go pursue your passions and do something else. So sometimes it's beneficial to kind of be selfish when you're young, learn a skill and study something that's going to make you a lot of money, be very, very diligent and studious with that money, be a good steward of that money, invest it, grow it, and then do whatever you want to do, right? So I would say pick a career path with a lot of runway and ask yourself, who are the players in the economy who are making the big money? And right now, it's a lot of people working at the big tech companies like NVDIA, all the FANG companies. But if you want to be in the investment banking business, I would really focus on your grades, and I would try to get into a target school, an Ivy League school or a top 50 school, and I would study really hard, and I would network a lot, and I think you'll do great. I think you'll do really, really well. Anyway, we somehow ended up in Koreatown. This is one of my favorite places in the city. Hey, JC, what's going on? Good to see you. Hopefully you're well. Wow, Nora says, Tom, my uncle is a nuclear engineer and he is always recruiting. Had a great career with a major company and now consults in retirement. That's amazing. And, after the major, I should say Fukushima disaster in Japan, the nuclear power industry was really demonized and underinvested. And then comes along, the boom in cloud computing and AI and data center, which the world has kind of done a 180. And that's why a lot of the existing nuclear power plants that we have globally, they were built in the 70s and 80s, right? And it's very, very expensive to bring online a new nuclear power plant. So many people are just extending the life, or I should say many countries are just trying to maintain, make repairs, and extend the life of existing nuclear power plants. So there's huge demand for nuclear engineering. And I think one of the easiest ways to kind of get involved in that, if you don't have a lot of money, if you're kind of concerned about, how am I going to pay for college? Well, you could join the Navy and enroll in their Navy nuke program, right? And you'll learn how to run the nuclear reactors on, the aircraft carriers or the nuclear submarines. And you'll probably get a really lucrative job after, you'll probably get a really lucrative job after retirement from the military. Anyway, if you guys are enjoying the live stream tonight, it's very late, but feel free to leave a like on the video and click the subscribe button if you're new. We tend to do these streams every day starting at 8:45. Oh, one piece of news that we didn't cover today. We have some big news out of Taiwan Semiconductor, ticker symbol TSMC. They were at the White House today with President Trump and Commerce Secretary Howard Lutnick, the former CEO of Cantor Fitzgerald. And they have announced a $100 billion investment into the United States, which is probably trying to circumvent a lot of the tariffs, but it is what it is. To kind of follow up on that word circumvent, anybody remember the DeepSeek news that we were talking about, that everybody was freaking out about? China alleges that DeepSeek was built with about $6 million and that they didn't use any advanced chips or server technology to do that. So everyone thought that, CapEx spending at a lot of the tech companies, particularly the hyperscalers, were going to collapse. Well, it turns out that wasn't true. There's some interesting data coming out of China, and I wrote down some of these figures because it was quite interesting. Throughout the day, anything interesting that I read, I tend to throw up on my X account. So if you guys have Twitter or X, you can follow @WalksWallStreet. But get a load of this. So the new NVIDIA chips right now are the Blackwell chips. The last earnings report, we got a little bit of color on preliminary sales. They sold about $11 billion worth of those chips. Now, NVIDIA Blackwell servers containing about 8 AI processors could retail for about $600,000 or more in mainland China. Now, what is wrong with that statement? Does anybody know what's wrong with that statement? Well, NVIDIA chips are not allowed to be sold to Chinese companies or even be in mainland China, right? Due to the regulations and the crackdown on, I should say, restrictions on, high-tech American tech and chips being sold into China. However, there's actually a major secondary market for these NVIDIA chips being sold into mainland China. And one of the ways that they do that is Chinese companies create shell companies, predominantly in Malaysia, Vietnam, and Taiwan, in which case they purchase the NVIDIA chips and they resell them back essentially to themselves in China. So there's a huge market for that. Which leads me to my final point that, DeepSeek is probably, running a significant amount of NVIDIA chips. So I would be poised to say that there is a significant amount of NVIDIA being used at DeepSeek. Let's just say that. Now, the secondary question is, do we think NVIDIA knows that there's a black market and that their chips are being sold into China? Of course. The answer is a resounding yes. Now, do I have any proof of that? No, but I think it's pretty obvious, right? I mean, Jensen is a pretty smart guy. I mean, arguably some of the smartest people in the world work at NVIDIA. They know that their chips are getting into the hands of Chinese companies. They're just making so much money that they kind of maybe turn a blind eye or they don't crack down on it as much as they should. But they definitely know that those chips are being sold into China. That's for sure. We're now walking towards 34th Street, Penn Station. Hey, what's up, Judy? Oh, we're passing by Target. Speaking of Target, I think they report earnings tomorrow, right? This is going to be a big week for earnings, particularly cybersecurity companies. I think we have CrowdStrike, Zscaler, maybe even Thursday. I believe we're going to hear from Costco, if I'm not mistaken. I think Costco's up on the chopping block too, Target, Costco. So it should be a pretty big week. I mean, about 90% of all companies in the S&P already reported, but we do have some heavy hitters here too that are on the block for this week. Hey, Emmett, what's going on? This is late out here, but glad you're live tonight. Yeah, it's cold too. Kevin, yeah, it's pronounced Target, indeed. We only have one more day of freezing cold, and then we're back to normal. So it is what it is. Cole says, I am currently at a 3.9 GPA and trying my best to study for the ACT. I toured Duke last week, so I will be applying to... Wow, well, that's a great school. Well, I think you're going to be more than fine. It's pretty impressive. I don't even think I took an ACT. I honestly can't even remember. I know I took the SAT, but I don't think I took the ACT. I mean, this was a billion years ago. I don't even remember, but I don't even know if they scored the SAT and the ACT the same as when I took it. It's probably totally different now. This was like, I think 2013 is when I took it. Maybe 2014, 2013, something like that. What is the mascot for Duke? The Duke Blue Devils, is that it? Duke has a good basketball team. Who's that famous coach that used to coach Duke? Is it Mike Krzyzewski? Is that it? Hey, Bob says, how's decoupling or divestment from China work? Easier and more effective than enforcing tariffs? Well, the interesting thing is that a lot of countries already are. And that's why you've actually seen our deficit really balloon with India. Because think about all of the major companies that have shifted manufacturing capacity away from mainland China after the virus, right? A lot of that manufacturing capacity went to India. One US company that has done a lot of business in India is Apple, right? Tim Cook and Apple moved a ton of that manufacturing capacity to India. And a lot of that's probably going to be brought back to the United States. I think Apple last week just announced that they're going to be building a major manufacturing facility in the US. It's going to be a partnership with Foxconn. I'm not too sure how many jobs that's going to create. However, that is going to be a major trend. It already is a major trend. That is another reason, by the way, which is very important context to the whole tariff and deficit talk. Everybody talks about China, China, China. What the media and the news won't tell you within all the rage bait is that our deficits are shrinking with China. And it's mainly because of what we just explained. It's still huge, right? It's the largest trade deficit we have is with China, but it's actually been improving. But much of that deficit has just been spread around to other countries, like Vietnam, as well as India, because a lot of that manufacturing is just being shifted and allocated to other parts of the world. Yeah, Taiwan, Robert, for sure. We just spoke about Taiwan. Semi was at the White House today with Howard Lutnick and President Trump. This is the new entrance to Madison Square Garden. Anybody know what time it is? I just want to do a quick time check. Beautiful shot of the Empire State Building. 11 p.m. Thank you, TD. Appreciate it. Now, we did talk about market mechanics today, but I think it's important to quickly review it again. We have about 7 distribution days now on the S&P 500 and 8 on the NASDAQ. And we have some of the true market leaders that have been leading this market higher now sitting well below their 200-day moving average. So NVIDIA, I hate to say it, but it is possible that NVIDIA is cooked for this cycle, right? So even though it's not too far off in terms of a percentage basis off of its all-time record high, it has gone sideways for about 8 months. And there's a lot of heavy volume and churning within that base, and it's breaking below the 200 days. So just keep an eye on that. Also, the semiconductor sector, right, the indice, the SOXX, is also kind of breaking down here. And this really all started with AMD. AMD has been lackluster for really about a year, kind of, and now you're seeing a lot of the individual names kind of roll over. So the market weakness really shows up first in the individual names. And then you kind of see it really hit the indices. So I would just be a little bit defensive here. Even though the major indices aren't too far off from their record highs, you're starting to see those cracks form in the foundation. You're also seeing it in fund flows. Another thing we talked about today is as the market was getting hammered, consumer non-durables were catching a really big bid, right? All the tobacco stocks did really well today. Church & Dwight, ticker symbol CHD, did well today. Procter & Gamble. That is a safety trade when a lot of those stocks are getting bid up. And it really tells you what type of market you're trading in when you see pretty much everything down besides consumer non-durables. So keep your eye on that. Katie says, Tom, without Ukraine's resources, we cannot build more Teslas. I don't know about that. I just think the whole, request of the minerals deal, essentially the context of that conversation is the United States wanted a pretty big minerals deal with Ukraine without specifically giving them a security guarantee, right? But a security guarantee is pretty much like read between the lines. Because if we have a controlling interest in a lot of the minerals in the rare earths in Ukraine, well, if you take a look at a map, where are predominantly a lot of those rare earths and minerals in Ukraine? Most of them are right now in Russian-occupied territory. So if we were to pencil out a deal and U.S. companies are there and have a controlling interest in that land, well, the security is kind of built into the deal without being built into the deal, right? However, obviously, it's looking like this deal is maybe, well, I actually still think it'll get signed sooner rather than later. I think they'll probably come to an ultimatum, or they'll probably come to some sort of an agreement. And, but I guess to answer your question, I don't think we desperately need the minerals. But it would be good to have a controlling interest there. Now, many people, not to go down a rabbit hole, would say that there's a lot of nefarious activity going on, and people and companies and countries have a vested interest in this war continuing to go on, right? Military-industrial complex and the like. That's no place for me to kind of give my insight into that. We mainly talk about politics in the context of the markets. But if you look at a lot of the European stocks, European defense stocks, those have been outperforming U.S. markets even. And if you look at the German DAX, which is the German equity market, that has been performing exceptionally well. And the theory there is the Trump administration has been pushing European countries to increase their own military spending. Right? Trump has kind of been playing the hardball, saying, look, we're not going to keep throwing into this. We're not going to keep funding this. We're not going to keep funding your security. And that's why you've been seeing a lot of these emergency meetings within the European Union saying, we can't rely on the United States anymore. We have to beef up our own military. Which is kind of like, yeah, that's kind of what we were asking you to do in the beginning. And that's why you're seeing a lot of these European defense stocks flying, because as a percentage of GDP, defense spending is going to have to go up all across Europe. And Whether you like it or not, that is very good for defense stocks. We're going to head right back up to 42nd Street. Hey, Jack Jackson, what's going on? Good to see you. Could feel it warming up a bit. I don't know, what do you guys think of the overall market action, everything that's going on? It's been a lot. I feel like we covered a lot of ground in the hour and 16 minutes that we've been on. Esmeralda, what's up? Hey, got yours, so I'm just trying to find a bottom. Don't want to jump in and catch a falling knife. Well, the best way to do that is just to wait for a follow-through day. So with those high amount of distribution days racking up on the NASDAQ and the S&P, just wait for a follow-through day to gain exposure to the market. So a follow-through day is on the second attempted rally day on higher than normal volume, right? So until we get a follow-through day, if you're looking to commit new capital, that's when, it would be safest to do it. Hey, Elliott Wave Review is here. What's up? Says Tom, why do you think Bitcoin dropped to 83,000? Trump announcement didn't make much of an impact on Bitcoin ETFs today. Yeah, pretty much reversed all of its gains. What I would say is you had a pan sell-off across the board, and particularly a lot of high beta, high octane names got sold. Pretty much all the tech stocks, and Bitcoin is very, very high beta. What I would also say, which I kind of said last night, is with Bitcoin and the crypto space, see the big picture, right? The big picture is what it's going to be 10 years from now. Right, what this is going to evolve into 10 years from now. Okay, I think this is going to be a $50 trillion industry. This is going to be a massive, massive business. So I would say grab some bench and chill. We've talked about all of the factors, right? Citadel is now going to get in the market making business for cryptocurrencies. I think futures trading is going to start on Solana. So there is going to be a whole ecosystem created and built around this. And that is going to take the entire space, right? The market cap of the entire space, probably north of $50 trillion. over the next 10 years. So that is the play. So it's a very, very small flea of an investment in terms of overall size of the space. So the vision is not to buy Bitcoin, at $50,000 and flip it out at 100, right? The big picture is the largest asymmetric bet that I've pretty much ever seen in my life since I watched Bitcoin hit $1,000 for the first time. So the opportunity cost of not sitting and enjoying the ride as that gets built out, because we have a frame of reference, right? We have a reference point of the build out of the internet, right? Look at the adoption curve of average daily users of the internet, and then do a kind of side-by-side comparative analysis of average wallets, like crypto wallets, Bitcoin wallets. It is a huge, huge adoption cycle. That Mickey Mouse guy that we walked past, that guy smelled like, that was probably the worst smelling Mickey Mouse I've ever smelled in my life. Think about maybe like 3 or 4 packs of freshly smoked cigarettes with maybe 2 to 3 gallons of really disgusting, cheap beer, like piss beer. I'm talking about like warm piss beer. That's what he smelled like. With that being said, I gotta run, guys. I gotta head to bed. But tomorrow we will be back live at 8:45. We have a lot to talk about. This is gonna get crazier before it gets not crazier. And we'll break it down right here on Walks from Wall Street. So subscribe to the channel if you're new. And if you want to join us tomorrow, tune in at 8:45. But have a wonderful week. Have a safe week. And I'll see you guys tomorrow. So Stephen Bate, thank you. Scott, Samantha R, Adrian, Professor Dario, Michaela, Larry Adams, all of our moderators, Mohammed. Thanks everybody. Be safe. Signing off from Times Square in New York City. See you soon.